Welcome back to Bunnex Investment Group. In this video, we are going to talk about a very simple strategy that can actually convert trading into a real business where you can earn a living from. Alright, so we are going to be using several indicators. Not this one you are looking at. This is called BTMM Pro. It's actually an indicator that can help you buy and remove confusion in your trading, whereby you can actually get these signals directly to your phone. It's actually a paid indicator, and you can get yourself one copy using the link that I have left in the description box below. Alright, back to the video. What do we need when we are going to trade this particular trading strategy? We are going to require several indicators. I'm going to first illustrate how you need to see the market structures, and then after that, you actually will apply it on real charts. Alright, so first and foremost, when we are trading for a living, it's not going to be requiring us to be trading over and over again. That is why we need to favor swing trading, whereby we enter and hold that particular trade for long so that we won't make as much mistakes. When we are trading full-time, we do not want to make several mistakes. Therefore, we need to limit how many trades we get. So the first thing that we need to see is basically a structure whereby an impulse has been issued, and that particular impulse may actually break structure. And by breaking structure, it's breaking the last high or the last low. So it is going to utilize the H4 time frame, whereby this is our setup. So if you are going to adopt this particular strategy, you need to draw this particular zigzag that I've done and stick it in your office, because you are going to require this to be imprinted in your subconscious mind so that you will actually trade it seamlessly. So this zigzag is basically representing an impulse, a pullback, and then continuation of that impulse. How do we see this on the charts? And is it going to be easy for us to spot these particular trades? You are going to discover that it's going to be extremely easy, and it's something that anyone who knows how to call candlesticks will actually be able to apply it. Alright, so the first thing that I'm going to do is I'm going to install my indicators, and this is basically a template which I can give you for free. Just communicate with me directly using the link that I've left in the description box below. Alright, so basically when we shift to this particular setup, the next thing is now to observe our markets on H4. Why H4? It's all because H4 time frame is going to give us time to react and as much time to hold a trade up until it matures. So what do we trade? We've said we trade that zigzag, impulse, pullback, and then continuation. How are we going to see it on the charts? So basically, what we need is basically to see turning point. A turning point whereby the market will give us what we call a 1350 EMA cross. For the purposes of those who actually are new to this channel, these EMAs, the blue one represent a 50, red 13, 5 in yellow, 200 in red, and then the other one in dark blue, which is the 800 EMA. So in this particular case, we've said the first step is to see a 1350 EMA cross on the H4 time frame. We've said we enter at zigzag. We need to see an impulse and then a pullback. So an impulse was issued and then a pullback was issued. This pullback is where we want to make an entry at its end. So our interested point is where is the pullback going to end, and that is where we will actually get in. So in this particular case, we can see that the pullback has ended at the 50 EMA. After that pullback has been issued, our goal is to hold that particular trade for the whole week. Whenever we get a pullback to the 50 EMA after a 1350 EMA cross with an impulse to the upside or downside, our goal is to enter and hold that particular trade for the whole week. We can see that the market later gave us level 2 and level 3 on the H4 time frame. So we are saying this particular point is the solid golden point where we need to make our entries. So if that is the case, let's now concrete this particular strategy so that we can be able to apply it in our own trading. We can see that there was a 1350 EMA cross here. After that 1350 EMA cross, draw your zigzag structure. First, drop, pull back to the 50 like that, and then continuation of the market. We hold for the whole week, right? We wait again. We can see there was a 1350 EMA cross that was issued here. Then our zigzag, drop. After that drop, pull back to the 50, and then we hold again for the whole week. We are saying there are also points whereby you are definitely going to lose, so you must try not to trade when there is high fundamental news. We can see that here we had a crossover of 1350 EMA, 1350 EMA cross, and then zigzag, push, pull back. But on the pullback, we can see that there were these spikes. These were news related. And whenever we have news related spikes, it's going to be detrimental to our point of entry. Therefore, this was actually a day whereby we must have stayed out of the markets. If ever you were in the markets, you were going to lose. And whenever we lose the market, we know that we are definitely going to make it up in the next particular trade. Why am I saying so? We can see that this was a loss, of course, but later the market gave us another peak formation low as a reset, and then zigzag, push to the upside, 1350 EMA cross, pull back. You can see that we had another trade that was going to cover every loss that we had, because these particular type of trades will move for more than 5 to 1 or more than 10 to 1 sometimes, because we've said you hold that particular trade for the whole week. So in recap of everything that I've said, we need to see a 1350 EMA cross on the H4 time frame. Just to try to make it smart, don't try to take trades whereby the market is choppy and there is no clear movements. When you get that particular 1350 EMA cross, the next thing is now to see an impulse to the upside or downside, and then after that impulse to the upside or downside, we need to see a pullback of the market to the 50 EMA. When we reach the 50 EMA, we will actually enter preferably at a candlestick reversal pattern, or basically at a candle closure above the 13 EMA. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you on the free Telegram channel.